Cathie Woods believes that the Federal Reserve is making a mistake by raising rates as fast as they have been. And what she really believes is that there is a potential for risks from deflation, not inflation. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in the comments. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one because I'm always happy to hear from Cathie Woods, even though we may not necessarily agree on valuations or what stocks we're adding to our portfolios. But I love hearing from Cathie Wood because I do believe that she does the work and her views are very sound from a macroeconomic perspective. Of course, we just don't necessarily agree on valuations and what positions to put on our portfolio. But you can see here, Cathie Wood, the CEO and CIO of ARK Invest, believes that the Federal Reserve is taking the wrong course and in its current monetary policy. Wood continues to view deflationary forces as the bigger long-term risk to the economy. And she's not the only one that believes this. If you listen to the works from Ray Dalio, he actually also believes that there are deflationary forces that are going to be impacting the economy. One is the delevering of the Western world, and two is the aging out of the working age population, i.e. the boomers are retiring. So it's not just Cathie Woods that's saying this. Ray Dalio, who's very respected, especially in the value investing community, is also saying the same thing. Now, Woods pointed to inventory buildups at places like Walmart and Target as support for her deflationary concerns. And I actually did a video on that and I'll talk about that in a second, but she's also looking at commodity prices. So copper prices have offered another important signal to Cathie Woods. She's seeing that copper is now down 25% month over month and down 25% year over year. Even oil, she's saying, is starting to break despite what's going on in Russia because the global economy is, in her opinion, in a recession. And so we're now down to like $96 oil, which is down 22% on a month over month basis. Now, what she talked about earlier with the inventory buildup, that I actually covered in a video where Michael Burry actually predicted a bullwhip effect, which is the effect of rising inventories and then not having enough inventory and then rising inventories again as a result of Federal Reserve action. And so I will actually link to that video at the end of this video because I think that's a very important concept that you guys got to understand if you haven't seen that video yet. Now, one of the reasons why Cathie Wood and Ray Dalio do believe in sort of a deflationary thesis is notice that the labor force productivity rate is currently at the level that it was in the mid 70s, just as more and more boomers retire. People did not come back to the workforce at the same levels that they were prior to the pandemic. And so that is causing strains to the economy. So anytime you hear people say that the unemployment rate is low, yes, the unemployment rate is low, but the only reason why the unemployment rate is low is because there's a lot of people that have not come back to the workforce. Now, my prediction is that if inflation continues to run strong, which I do believe it does, which inevitably causes a recession, which I think it does as well, because of the rate increases that the Fed is making, it might draw more people back into the workforce as their pensions may not necessarily help them, or a high job earner may potentially not be able to claim such a high salary anymore. And so we could have situations like that, which could draw more and more people back into the workforce. Now, that's not always a good reason why people could potentially return back to the workforce, but I do see that happening, or I do see potential of that happening. So we'll see how it plays out. Now, the other issue that the US and I guess Canada or the Western world is contending with is because they're experiencing sort of like a population decline of working age people as more and more people age out and they leave the sort of working class. How do you keep productivity at the current levels? Well, the only way you can do it is with immigration. And that's something I really quickly wanted to touch on. You can see that a future without immigrants to the working age population in the US would be a bit dire because without immigration, by 2035, the working age population actually declines back to early 2000s era level numbers. So I believe high skilled legal immigration is absolutely necessary. And so you can see here, this is from the Center for Immigration Studies, but this was done in 2019. And what they're saying is that in order to keep the sort of working age population where it is today, you're going to have to increase immigration for working age people by 3 times the current level that the US is at today. And so right now, the US is running into a situation where the number of working age people are declining. And so it's an emergency to increase the amount of skilled labor coming into the workforce. And it's not like there's a shortage of skilled labor positions that are open. In fact, there's a surplus and there's not enough people that can get through the visa situation in the US. And so one of the ways that other countries have sort of monetized or capitalized on this is, for example, there's no caps on skilled labor workers in Canada. And so they can get remote jobs working in the US and then immigrate to Canada and work out of Canada using their jobs in the US. And so what this does is you get a worker paid for by the Americans, but they live in Canada, and so they end up growing our economy in Canada. And so that's something that the US misses out on. Like I always say, with job protection, yes, you want to protect American citizens from being able to get those jobs and not just get everything outsourced internationally. But at the same time, if there's a surplus of these jobs, you got to reduce the bureaucracy, because when these jobs get farmed out to other countries like they are with Canada right now, you still end up losing that job because there's nobody in America to fill it, but you also lose a consumer. That's somebody that could have bought a house and could have contributed to the local economy in the US, but they've lost out on it and they're instead contributing to the local economy in Canada. And so in this environment, I really believe that one of the ways to sort of address a world where there's deflationary forces is focus on geographically diverse, future-focused companies. And so one company that's very much in line with sort of that criteria is Alphabet. You can see here that I believe that Alphabet is a future-focused, globally diversified company, and it's a strong addition to a portfolio in this type of environment. They are firing on all cylinders. Google search continues to grow. It is a global consumer monopoly. YouTube is once again a global consumer monopoly in the video space. And then you also have the ability to leverage the future-focused technology of Google Cloud, which continues to grow. They're number 3 in the space, neck and neck with Alibaba globally. But of course, I think because of the data security issues, Google Cloud probably will take that number 3 space ahead of Alibaba. And there's other industries that are needed right now, such as housing, as the US is about 5 years behind on new home supply. I understand that the housing market is challenged right now, but there's still a secular demand for new homes. Additionally, if we are expanding the US population through immigration, we need to house these people. It just so happens housing stocks are very inexpensive at the moment due to short-term economic concerns, and it's an area that I have put a substantial amount of the portfolio into. And so there are some names that I talk about on this channel. 4 of them are of the top in the tracker. So you can see Dreamfinders Homes are up there on the tracker, trading at under 40% of its intrinsic value. There's TriPoint Homes, there's Zillow Group, and there's LGI Homes. LGI, of course, is my favorite home builder. And so there's quite a bit of opportunity in the space. Now, how do you get access to that tracker and the valuation models? Well, you can get access to all the models and the tracker at the lower tier of the Patreon. And if you wanted to join us for an epic live presentation each month, my very best work is reserved for this call. So I highly encourage you to join us. There's a lot to gain from that Zoom call, especially from that Q&A period. Now, earlier in this video, I did talk about how Michael Burry predicted a bullwhip effect for the market. And I made a video which pretty much sums up exactly what he was saying. And so you can get to that video right here.